Hello YouTube, welcome to the Common Investor channel. This is Joe, so I hope everyone's had a lovely week. I'm just here to bring you a free trade portfolio update. Um, I prefer using free trade for buying UK stocks, particularly if they're in the AIM space. For me, just I feel like the spread within free trade is a lot better compared to trading 212. So I just basically use free trade for this. If you guys have been watching my earlier videos, I started off with free trade, and then moved into trading 212. Essentially, when free trade announced that they were going to start charging for the ISA, which maybe, to be honest, thinking about it, might have been a mistake essentially, and mainly because I had pretty good positions at the time, and I sold them off to chase growth stocks. Um, so I think one thing I've learned so far is try to avoid chasing the market and just look for good deals. Try and always buy on the dip, essentially. Look for good deals and have strong conviction in your stocks. Um, and if possible as well, the stocks that you buy, if you try and ensure that they're stocks that are known. Because at the end of the day, it doesn't really matter how good a stock is, like how good a company is. If it's not known, no one's gonna actually buy the stock, right? And it's just gonna stay flat. So it's always maybe eventually, I guess maybe something like Jumia. So Jumia has always been there. But I bought into Jumia a while ago, but I sold it off because the stock wasn't really going anywhere. But obviously, with the whole scenario and everything, online e-commerce kind of became a lot more popular, and people started looking into online or e-commerce companies, which led to Jimmy just literally taking off. So I think in such instances, I think when things like that happen, it's pretty much just luck. But overall, if you look for well-known companies that are good values, and just kind of put your money in and have a high conviction of those companies. As long as their revenues are still going up, you got Salesforce, you got Adobe, you got quite a few decent companies. As long as that's the case, then you'll be all right. So as far as of today, this portfolio, it's my UK stock portfolio, and it's valued at £4,552. So far, I think I've put about £4,000. So I am up. Um, well, since I started using this portfolio again, or this free trade again, I'm up about £552. It's saying 1,137 because at the time I did, this was like 2 years ago. I had Tesla in this account, I believe, and some other stocks in Tesla. Tesla like went up a lot at the time, and if I'd held it, I would have probably been up a lot more now. So I sold it at around. I think I sold it when it was around like 400 pre-split. So mistake on my part, but hey, you live and you learn, right? So just gonna talk you through. I think as I said before that, I would have been up 600, so 600 plus 500 and whatever. That'll give you about yeah, um, that'll kind of give you around roughly what you're seeing right now. Okay. Yeah. So right now I've got S4 Capital. I'm up to 80% on that one, which is pretty good. I've had that for about 2 or 3 months or so, and it's done really well over the past over the past month. So that's just flying. Essentially, it's an advertising company. When I did look at it, it kind of reminds me of a British version of Trade Desk. Um, I think it's a good company. They've got good revenues, good earnings, and there's one for the future essentially. And it's definitely still. I mean, if they keep on growing as they are growing right now, then there's still pretty much a good price to buy them, I would say. You got Fever Tree, just my play on recovery essentially. So they dropped a little bit, but then the drop was due to revenue projections. Basically, investors weren't happy with it. They were still projecting growth, but it wasn't just as much as investors were expecting. So it led to a drop in price. And I just bought at the bottom basically, and it's coming back up. So hopefully, I believe with the recovery, people start going to bars. People start, the weather's lovely, so they're going to be buying their mixers, so it should be better than expected. LSE had a big drop, and it would just look very juicy at the time. And literally, I kind of bought at the bottom as well, and it's been going up steadily ever since. And Dot Digital, same. Well, Dot Digital, it's a good company. I was looking for companies that basically had dropped at the time, and this had a drop and looked at revenues, earnings, were pretty good as well. So bought into this. So well, yeah, I think my main strategy essentially is basically trying to invest in like growth stocks that revenues are still going up. If possible, as for earnings are going up as well, and just stuff that's well managed. And yeah, I think that's it. So yeah, so if everything's at green, I'm grateful for that, considering how the market is. Obviously, my training to want to actually put money into that as well. But for now, kind of targeting more. I'm looking outside the US market just because the US market is very choppy right now. But I think other markets are doing pretty well. Right. That's it for me. Thanks for watching, and hope you have a lovely weekend. Bye.